What if I told you there was a faster, more exciting way to reach financial freedom without saving every penny for decades? The traditional FIRE plan works, but it's slow, strict, and hard to stick with. And that's exactly where Crypto FIRE comes in. In this video, we're diving into the FIRE movement and tackling one of the biggest questions out there. Could crypto be the ultimate shortcut to early retirement in a world that's changing faster than ever? Let's start by understanding the traditional FIRE model. FIRE, aka financial independence, retire early, is a movement of people devoted to a program of extreme savings and investment with the goal of retiring far earlier than traditional budgets and retirement plans would permit. The model follows the 4% rule developed by William Benagin in 1994. This rule states that people who retire around age 65 can take out 4% of their savings in the first year and then adjust for inflation each year after. The rule has allowed many people to plan for retirement using steady savings and smart investing. Within the FIRE movement, there are several variations that reflect different lifestyles and goals. But the most common approach is where people usually work for several years, saving up to 75% of their yearly income. And once their savings hit that sweet spot, which is typically 25 times their yearly expenses, they quit. At this point, the money you saved would be generating enough profits to cover your expenses.
I heard somebody describe coasting to financial independence like you're driving down the freeway and you see this coast FIRE exit as you're passing it, and you have the opportunity, if you want, you can downshift and just hop off the exit.
Of course, this strategy isn't without its downsides. One major challenge is the mental strain that comes with extreme frugality. It's not easy to restrict spending for years while watching others enjoy the lifestyle you're deliberately postponing. The intense frugality required can lead to burnout, isolation, and even decision fatigue as every expense is scrutinized.
A lot of members of the FIRE movement exhibit classic signs of stress, anxiety, even depression, thinking that hitting some mythical number in their spreadsheet will suddenly make them happy.
Keep in mind, this approach requires saving more than half of your income over many years. A tough commitment by any standard. Apart from the psychological toll, it's a strategy that's hard to sustain, especially if you lose your job or the market turns against you. It also leans heavily on historical data, much of it dating back nearly a century. But today's world is far more volatile. Prices fluctuate faster, economies shift unpredictably, and savings no longer grow as steadily as they once did. So does that mean FIRE is outdated? Not quite. This is where crypto enters the conversation. Traditional FIRE advocates have largely dismissed digital assets as too risky for a retirement plan, but a growing number of younger investors are embracing crypto, and for good reason. Despite its volatility, crypto offers the potential for significant long-term returns, which could accelerate the path to financial independence. And yes, as volatile as the market is, cryptocurrency has grown much more than regular investments like stocks or bonds. In fact, actual studies back up this claim. One study published in the Journal of International Financial Markets, Institutions and Money in 2018 analyzed the performance of portfolios that included various combinations of Bitcoin, stocks, and bonds. They found that portfolios with a small allocation to Bitcoin generally had higher returns and lower volatility compared to portfolios without Bitcoin. Not to mention, there are a bunch of passive income strategies that directly align with the goals of the FIRE movement. There's yield farming, which means you lend or lock up your crypto in special digital systems called DeFi platforms, and in return, you earn rewards like interest or bonus tokens. Unlike regular bank savings that give small fixed returns, many crypto platforms offer higher returns that grow over time through compounding. This kind of income could help support early retirees, allowing them to live off the earnings without selling their main investment. Meanwhile, staking is a process where users lock a certain amount of their digital tokens on a blockchain network to earn rewards, typically additional cryptocurrency. Of course, Crypto investing comes with its own set of risks: market volatility, security vulnerabilities, and ongoing regulatory uncertainty. So what's the path forward? Fortunately, there are emerging strategies and tools designed to help manage these challenges head on. A smart and balanced crypto portfolio is key to making the crypto fire strategy work. The best plans include a mix of well-known and newer digital assets. This helps spread out risk while still aiming for strong growth. Most people start with trusted coins like Bitcoin and Ethereum. These are seen as blue chip cryptos because they're more stable than smaller ones, but can still grow much more than regular investments. Then a smaller part of the portfolio goes into promising altcoin projects that could grow fast, but also come with more risk. This mix helps keep things steady while chasing bigger rewards. Apart from that, you need to focus on passive income strategies that bring regular cash flow. These strategies will save you the anxiety of simply holding coins and waiting for their value to rise. You can also join liquidity pools where you provide your crypto to help with trading and earn a share of the fees. More importantly, you need to think about a smart exit strategy. The general advice is that instead of trying to sell everything at a perfect time, set clear goals and take profits slowly during good market periods. This way you can secure some gains without giving up your position. As you get closer to financial independence, it's a good idea to shift some money into safe, more stable investments. This way, you'll end up with a diversified portfolio.
I also think that cryptocurrencies should be supplementing your current assets, and they should never replace them. It's all about diversifying your assets based on return and risk.
On that note, crypto market crashes are one of the biggest dangers to the crypto fire plan. In the past, prices have dropped by more than 80%, which can be scary. To get through tough times like these, you need to be mentally ready and have a strong plan in place. One smart move is to put only a certain part of your money into crypto, just enough so that you won't panic if the value drops for a while. This is called position sizing. Another helpful trick is dollar cost averaging, where you keep buying a little at a time, even during a crash, turning price drops into chances to grow your investment.
You manage your pin risk, your position sizing, your net and gross exposure. So you don't want to be you don't want to be leading the pack in terms of vol, and you also don't want to be market neutral.
On top of that, keeping your crypto safe is one of the most important parts of any crypto fire plan. Unlike banks, where your money is insured and protected, in crypto, you are your own security team. That means you need to take strong steps to protect your assets. Use a hardware wallet for long-term savings so your coins stay offline and safe. Always turn on two-factor authentication on exchange accounts and double-check anything you connect your wallet to. As for the taxes and legal considerations, the IRS treats cryptocurrency as property, meaning that when you buy, sell, or exchange it, this counts as a taxable event and typically results in either a capital gain or loss. Remember, you're not taxed for holding crypto. You only need to pay when your crypto investments lead to a gain in your taxable account. At the end of the day, crypto brings something unique to the FIRE movement. However, the viability of going down this path completely depends on individual risk tolerance. For people who jumped on crypto during the initial growth phase, this approach has given them financial freedom. But for most people out there, I'd say this path is best suited for those who can handle big ups and downs and are ready to learn a lot about the crypto world. As crypto becomes more stable and more banks and big companies get involved, the wild price swings may calm down. That could make crypto fire easier and safer for more people. Would you consider crypto fire over traditional fire? Let's discuss this in the comments.